Last tutorial we learned how to prepare sales ledger control account here. Today we will prepare purchase ledger control account. So we have a question taken from 2023 IGCSE accounting first paper. On that question we have purchase and sales ledger control account related items together, and we are required to prepare these two accounts. So here, before you watch this video, I'll recommend you please watch our previous tutorial, then you come back here. Otherwise many things you will miss. So here, this is a traditional T account ledger format. On the debit side we have date, detail and dollar column, and same three columns we have on the credit side. Okay, so let us write here credit and here debit. Okay, so purchase ledger control account, what is this, what we record here? Purchase ledger control account is actually creditors ledger control account or trade payables control account. Okay, so here what are trade payables? See here, accounts payable, trade payables and accounts payables are same. Accounts payable are amounts due to suppliers for goods purchased. So we got here two keywords. Okay, so here number one supplier and number two purchase. Okay, that means on the question, if we see any purchase related transactions or supplier related items, we will take to the purchase ledger control account. Okay, and others like customer related items and sales related items we take on the sales ledger control account. Okay, so if you can remember these keywords, you will never make mistake on your exam. Okay, so here what items we have on the question, let us have a look at there. So balances at 1st January 2023. So here sales ledger control account balances we have taken, and purchase ledger control account balance we have $8,450 credit balance mentioned in the question. Okay, so as it is a credit balance, we will go to the credit side and we will write the date first, 2023 January 1st. Okay, we will write here balance BD. This is opening balance. Okay, so here the amount is $8,450. Okay, so sometimes you have two balances on the question. Okay, so you may have debit and credit balance both. In this case the balance will be clearly identified, which one is debit balance and which one is credit balance. So debit balance you will write on the debit side and credit balance you will write on the credit side. In case you have one balance but it is not mentioned on the question whether it is a debit or a credit balance, in this case what to do? You will write balance BD, means opening balance, on the credit side, because purchase ledger control account balance. Okay, purchase ledger control account means it is a trade payable, accounts payable control account. Account payable is a current liability. Yeah, we know liability, current liability is a normal credit balance. Okay, it is a credit account, it has a normal credit balance, so we will write balance on the credit side. Okay, then what items we have on the question? So here credit sales, cash sales we have taken, and credit purchase we have here $7,325. Okay, credit purchase it will appear. Okay, so now which side we will record, on the debit side or credit side? Okay, credit purchase. First of all, you need to understand accounts payable. Okay, if you think that by making any transaction the accounts payable liability of the business of Lucas will be increasing, in this case you will record on the credit side. Okay, so if increase we will write on the credit side, and if you see your liability means trade payable balance is decreasing, we will record on the credit side. Okay, just opposite of sales ledger control account. Okay, so here purchase, when we purchase goods on credit, our liability will be increased obviously, yeah, because we could not pay money. We purchased on credit. So liability increased. So we know if liability increased, we will record on the credit side, okay? So let us write the date first. 2023, it is January 31st, okay? Last day of the month, we are preparing this control account. Okay, so here we will write purchases $7,325. Okay, great. On the question, if we have cash purchase, will you take it here? No, not at all. Okay, why? Because cash purchase will be taken to the cash flow. Okay, not control account. Okay, great. Then here on the question we have returns to credit supplier 463. Yeah, supplier related items we will take. Okay, it is a purchase ledger control account, so we will take all purchase and supplier related items. So here it is purchase returns. Yeah, returns outwards. So here for return outwards, we purchased goods, then we returned to the supplier. Now our supplier balance means trade payables balance will be decreased. Yeah, when balance decreases, we will write on the debit side. Okay, so let us write here the date first. 2023 January 31st. We will write here returns outwards. If you write here purchase returns, it is also okay. So here we will write $463. Okay, great, done. Our next transition is here. Returns from credit customer. Okay, customer related item we will ignore. Cash receipt from credit customer, same we will ignore. Bank transfer receipt from credit customer, same we will not take. Bank payments to credit supplier. Okay, it is 6,675. So supplier related item we will take to the purchase ledger control account. Okay, so here supplier paid us money by bank. Okay, so here what happened to the trade payables? Increase or decrease? Obviously decreased. Yeah, that means the value of trade payables will be now decreased. Yeah, when it is decreasing, we will write on the debit side. Okay, so let us write here date first, January 31st, as we received by bank. So in the detail column we will write here bank. Okay, the amount is here $6,675. Okay, great, done. We have our next transition here. Irrecoverable debts written off. It is not related. Discount received $210. Okay, so we receive discount, it is our income. Okay, so this transition will reduce the value of trade payables. Yeah, so when it is reducing, we will record on the debit side. Okay, so let us write here the date first. We will write here discount received $210. Okay, great. Our next transition is here. Contra entries $180. Okay, so contra entries are the entries that appear both the accounts, debit side of purchase ledger control account and on the credit side of sales ledger control account. Okay, so here when we prepare sales ledger control account, we record it on the credit side. Okay, now we are doing purchase ledger control account, we will write here on the debit side. You need to remember this entry. So $180, we will write here contra and date will be here 31st. Okay, done. Next transaction is here. Interest charge on overdue purchase ledger accounts. Okay, $166. So we purchased goods from the supplier, so we could not pay the money to the supplier. Then what happened? Then supplier charged interest on us. Okay, so now our liability, business liability will be increased. Yeah, when liability will be increased, we will record on the credit side. Okay, so let us write a date first, January 31st. Here we will write interest $166. Okay, so done. We have nothing more. All transactions we recorded. Okay, sometimes on the questions you will have closing balances given. Okay, in this case you need to write, if it is a debit balance, you need to write on the credit side. If it is a credit balance, you need to write on the debit side. Okay, because these are closing balances, balance sheet is. Okay, so here on this question we don't have anything. We need to figure out our closing balance. Okay, so how to figure out? We will compare these two dollar columns. Okay, debit dollar column to the credit dollar columns. We will check which column is greater in terms of value. So here we see definitely our credit dollar column will be greater. Yeah, so we will sum up on the credit dollar column first. So here if we total, we get 15,941. Okay, the total of the credit dollar column. So now we will take this amount to the debit side. Okay, just opposite side. So here if we write 15,941, then we will subtract these all amounts from these totals. Okay, to calculate our closing balance. Okay, so what you get if we minus this all? We get here $8,413. Okay, this is our closing balance. So we write closing balance as balance CD, stands for carried down. So date will be the last day, same 31st January. Okay, then it is a requirement in the question, we need to bring down the balance as well. So on the debit side, above the total we have balance CD. We will go to the credit side, below the total we will write balance BD. Okay, so here we will write balance BD 8,413, and what will be the date here? Date will be the first day of next month. Okay, so here we are doing for 2023 January 31st. So next month will be February 1st. Okay, so completed. This is how you need to prepare control accounts. I believe if you understood these two tutorials, you will never make mistake. You will get highest scores in your exam or test.